Hi, I'm Angelica Apel from the Nostalgic Homes Group at Compass.
And I'm Matthew Hibler with Cherry Creek Holdings, a local Denver mortgage lender.
A lot of people are talking about the R word, recession. And we wanted to cover what that means and what that could look like for the market. So, what is a recession and are we in one?
It's an interesting question. And honestly, it's hard to answer because how economists define a recession varies. It depends on the economist you're talking to.
Mm-hmm.
So, some peg are in a recession looking at 2 quarters of quarter over quarter reduction to the economy, meaning, unemployment rates grow, GDP goes down. It's really hard to define that. In general, I think, a recession can be recognized quickly if the unemployment rate grows or we're just seeing corporate earnings in general, shrink.
Mm-hmm.
The stock market goes down, et cetera. So a little bit hard to define, but I would say right now it's likely that we are in some sort of a recession,
Mm-hmm.
whether that be mild or bigger. We won't know until the data and statistics come out from a couple of quarters of just economic productivity.
Mm-hmm. A lot of people, when they hear recession, might think about our last big one, which was 2008, 9, 10, which was, as we all remember or might remember, was very hard on housing. How is this one different? And what is the outlook for real estate in this recession that we're likely entering into?
Yeah, that's an interesting one too, because when you think of 2008, 9, and 10, the recession was caused by the mortgage lending and housing industry.
Right. Yeah.
And so naturally, here we are about 12 years out from that period of time. And people tend to mentally equate recession with maybe the housing market because that's what triggered it last time around.
Absolutely. And last time was so dramatic and scary.
It was pretty bad economically, no doubt. And so now, things are very different. Fortunately, the mortgage industry learned a big lesson through that last 2008, 9, 10 downturn in housing. This time around, we have 12 years of responsible mortgage lending happening.
Very true.
We also have a real short inventory of housing supply.
Mm-hmm.
And for more graphics on that, if you're on Instagram and you follow Nostalgic Homes or Hibler Team Lending, we have awesome graphics that just depict how different the market is right now.
Right.
But generally speaking, the housing inventory is low.
Very low.
And so low from where it needs to be for what experts say is a balanced market.
Mm-hmm.
So there's still buyer demand, there's still new household formation, there's still a need for housing. And therefore, with responsible lending happening plus the low housing inventory stock, we're probably going to be okay going into this recession not necessarily being based on the housing and finance industry.
Right. So we're not in for a repeat of 2008, 9, 10, which is a huge relief. We don't have to live through another unprecedented event in our current decade.
And surprisingly enough, housing might be really strong through this recession, which is a dramatic change too. So as people are thinking about the last recession being based on housing and not housing this one, we actually might see strong housing, which would be a great place to put some dollars in investment right now, potentially.
Absolutely.